Welcome back. You're tuned into Bazaar Morning Call. Well, the SGX is suggesting a gap up, but there are plenty of stocks that we're going to be tracking, and our research team is standing by to run you through CNBC-TV18's top 10 stocks for the day. Sonia, you go first. Reliance Industries, big boy. How are the numbers?
Oh, good numbers. No complaints at all. In fact, the numbers were better than estimated, both on a consolidated EBITDA and a net profit front. It was a very strong growth for the oil to chemical business. So that was really the star of the show this time. The O2C EBITDA went up 16% quarter on quarter. And the oil to chemical margins, they were 7% last quarter. They improved to 10% this quarter. So that really was the piece that the street will like the most. It was a steady set of earnings from Reliance Jio. No complaints there. The average revenue per user has improved to 178.2 rupees. However, there was no talk of or no clarity on the tariff hikes at the analyst call. So that's just something that the street might ponder over. The retail business continues on a very steady footing as well, a revenue growth of 4%. The consolidated numbers will be up for you on your screen. EBITDA went up 13%, net profits went up 15%, and most brokerages have given it a thumbs up. So I just pulled out three of them for you. Nomura, Jefferies and JP Morgan. Nomura has a buy, target price 28.50. Jefferies and JP Morgan both have a target price above 3,000. Of course, standard disclaimer, Reliance Industries is the owner of the channel that you're watching, but the numbers were definitely above what the street was estimating.
Okay, all right. So that's about big buy Reliance Industries. Well, let's hop across to Abhishek. He's here to tell us about ICICI Bank's numbers. Hi, Abhishek. Morning.
Morning, Nigel. So records continue at ICICI Bank. The net interest margin is perhaps at an all-time high of 4.65%, with international net interest margin also being one of the best in last 3-4 years. So NII growth is the best in 7-8 years or even more for the bank, coming in at more than 34% YOY. Operating profit growth, that's being led by the NII growth. So it is also at 15-quarter high. Asset quality, both the gross NPA and the net NPA ratios are one of the lowest in 8 years or even more. However, on the flip side, the deposit momentum, that has slowed down a bit, and it's one of the lowest in last 27 quarters, with CASA ratio being the lowest in last 2 years or 8 quarters. In terms of P&L, both the NII and PAT is a beat on our poll. Back to you.
Okay, that's on ICICI Bank. So that definitely will be one of the stars of the show. But UltraTech, you're watching that as well?
Well, that's right. So I know the numbers, they were a little bit mixed, but I'm going with green out there because it's the big boy, and valuation-wise, well, it's got some bit of support. So run you through the numbers. Well, the revenue, the EBITDA and the profitability were bang in line with what we were working with. However, on the volumes front, it's a little bit better. So grey cement volumes, which is the core part of their business, that was up close to around 13%. That came on a low base and shows you that demand as well is resilient, and the management comments as well say that demand is fairly good, so no worries out there. The only worry was realizations. It was expected to go up by 2 to around 3% odd. It came in at less than 0.5% high on a sequential basis. Now, this is not very bad news for UltraTech Cement, but for the read-through for the industry, that will be a little bit worrying. So we'll have to keep an eye out to see how the other stocks react as well. And debt reduction continues, close to around 600 crores odd. Remember, they're incurring capex, but yet the debt reduction continues. So I'm going with green out there. We'll get further details post the con call that's scheduled later for today.
All right, Nigel, thanks very much for that. That's UltraTech for you. But now Kotak Bank is the other banking major which reported numbers of the weekend. Abhishek is back with us to take us through the details. Abhishek.
Well, Prashant, records galore over here as well for Kotak Mahindra Bank. The net interest margin is the highest in many years that I've seen, coming in close to 5.5%. So the NII growth rate, one of the best that you are seeing on a YOY basis in 26 quarters. And sequential growth is one of the best in last 29 quarters at more than 11%. So deposit growth, it's heartening to see that while other large lenders are not seeing deposit momentum on a sequential basis, Kotak Bank has seen a strong deposit momentum on a quarter-on-quarter basis. Is one of the best in last 11 quarters. The loan growth continues to remain strong, close to 23% YOY and about 5.7% sequentially. Asset quality, one of the best gross NPA and net NPA ratios that you are seeing in last 7-8 years. Robust ROA, close to 2.5%. What doesn't work is that the treasury loss continue for second quarter in a row. It has declined on a quarter-on-quarter basis, but it's a loss. In terms of P&L versus our poll, it's a strong beat both on NII and PAT. Back to you.
Thanks a lot for that. So that's on Kotak Mahindra Bank. But how about JSW Steel, Nigel? How did it look this time around?
Well, JSW Steel's numbers actually were a little bit better than what we were working with. So on the top line, it was a wee bit better. The margins were a little bit better as well. And let's highlight a few factors out there. The standalone EBITDA per ton, that's a domestic business. It came in at around 8,141 rupees odd. We were working with a number of close to around 7,900. So close to around 200 rupees beat out there. and it's improved on a sequential basis as well. So good news out there. Bhushan Power and Steel, well, that was a big swing factor. From an EBITDA loss, it moved into a EBITDA positive terrain. So good news out there. Though the debt number has gone up, that's predominantly because of higher inventory and the forex element as well. The management says that the inventory will gradually get pulled down in the Q4. And also, we know the rupee has stabilized. So unlikely that the debt moves up from these levels, going with green on that one. Though valuation-wise, it's the most expensive steel stock, which could be a bit of a spoke out there. But moving across to IT yet again, Reema is with us to run us through LTI Mindtree numbers. Reema, disappointing, right?
Yeah, so this is the first the results that the company has reported post its merger, and it's a miss on revenues and margins. So it's a top-down miss. Revenue growth at 1.9% is lower than anticipated. Very sharp margin contractions. EBIT margins at 13.9% is down 360 basis points quarter on quarter and down 460 basis points on a year-on-year basis. The company said part of it is on account of furloughs, fewer working days, but also due to one-time integration costs. The company said the miss on the top line to the muted performance on top line was on account of furloughs and lower working days. They've also given us a forward-looking guidance. In the next 4 to 5 years, they expect revenue synergies of $1 billion and a margin improvement of 200 to 300 basis points over and above their pre-merger level of 17.5%. But this is over the next 4 to 5 years. But for the quarter, it's a big miss, and I'm going to go with red. Back to you.
Okay, going with red for LTI Mindtree. Interesting there. It's been such a mixed bag across the mid-cap IT space. But Abhishek is here to give us some more numbers that he's tracking. Abhishek, over to you.
Well, Sonia, to begin with IDFC First Bank, the slippages have remained elevated just like in the previous quarter at around 1150 crores. Asset quality has seen improvement both in the overall loan mix as well as the retail portfolio. The net interest margin has inched up by about 28 basis point quarter on quarter, which has led to ROA being above 1%. Operating efficiency remains weak with cost to income ratio at 71.6%. PNL, it's a slight, NI beat. However, PAT is well ahead of our poll. Yes Bank missed back given the fact that asset quality has improved because they sold NPS to ARC or Asset Reconstruction Company. But slippages, they remain elevated, which is a worrisome factor. The loan growth, that's a tad miss. They are losing market share both YOY and quarter on quarter, which has led to net interest margin declining on a sequential basis. The PAT is at 7-quarter low and return ratios are one of the worst that you can get for private banks. In terms of their reporting, the PNL is below ICICI Securities estimate. Bandhan Bank, the MFI book is actually declining both YOY and quarter on quarter, and stress continues to come from there. The net interest margin is at 20-quarter or all-time low at about 6.5%. Other income is the one which has actually helped in the profitability this time around. Asset quality slippages remain elevated, and gross NPA ratio and net NPA ratio, they remain stable. In terms of PNL, both the NI and PAT is below our poll. SBI Life annualized premium equivalent, that's the only one to beat our poll. However, value of new business as well as value of new business margins, they are well below our poll. Value of new business margin is actually 200 basis point below our poll. Profits, they have come in at 300 crore. We are working with a number of 424 crore. So a red over there. Back to you.
Okay, thanks a lot for that. So plenty to digest in terms of numbers, but let's just give you a quick run through. Stocks with positive news flow. There's Reliance, ICICI Bank, UltraTech, Kotak Mahindra Bank, JSW Steel, IDFC First Bank and Yes Bank. While LTI Mindtree, Bandhan Bank and SBI Life are stocks on our radar that are likely to open in the red. We'll take a quick break. On the other side of the break, we'll have with us Vibha Padalkar, who's the MD and CEO at HDFC Life, to discuss their Q3 earnings. We'll also be joined by Probal Sen, the energy analyst at ICICI Securities, and Balaji Subramaniam, the Vice President at IIFL Securities, to discuss the Q3 results of Reliance Industries. Stay tuned.